The clock is ticking for the EU to strike a deal as President Trump's tariff deadline looms. The European Commission will ask EU leaders on Thursday how they want to respond to President Trump's deadline for a trade deal, now less than 2 weeks away. The options: a quick trade deal at the cost of getting better terms, or to escalate the fight and getting better. So what's on the negotiating table? Benedicte Lowe is an equity derivative strategist for Europe at BNP Paribas. Benedicte, let's start with if there's no breakthrough. Trump threatened to impose a 50% reciprocal tariff on the EU. How would European equities react?
Yeah, so what we saw initially in May when the President Trump came in with 50% on a tariff on Europe, we had an initial sell-off of around 3% on the Euro stocks. And then the market ended up the day around 1.8% down. And I think this is a pretty sensible roadmap for what to expect if that was to happen again. I think overall, there is a sense in the market. There is a bit of fatigue around the traded lines. And there's also this sense that whenever tariff will be put on, there will be some back and forth, and tariff can go down from the initial levels. So we wouldn't really necessarily expect the similar impact that we saw in April 1st after the Liberation Day.
So some reports have said that the EU is planning to impose retaliatory tariffs on US imports, as including on Boeing. Are there opportunities for some European equities in this scenario, for example, Airbus?
At the index level, which is the area of our focus, the more retaliatory tariff that we get in, the worse it would be for equity market as a whole. Our economists' thinking going into this is that we have two main scenarios. Whether we get what they call the preliminary agreement, meaning they agree on a few things and then they push the negotiation for later in the year, or second, they just postpone the deadline as a whole. So those two kind of angles that we have for our analysis are quite positive for equity market. And as a whole, our thinking going into the tariff negotiations is that down the line, the tariff on Europe will be of plus 10% versus where we were at the start of the year, which we think equity market can handle.
So you did mention in your notes that markets are not pricing in much risk around the deadline. Are traders being complacent?
Yeah, definitely. When you look at the vol curve on European indices, it's quite a normal shape. There is no kink. There is no real pricing of risk around the event of early July. The vol level as a whole is elevated, but there's no specific risk on that event. And I think this is due to a number of reasons. There is first overall this tariff around there's this fatigue around the tariff news. We saw other subject in the news recently, geopolitical, the rates picture that is coming back with Powell's speech and whatnot. So I think the focus is turning to other subject. There is a bit of fatigue, and there's also this lack of trust that those high tariffs will stay in place for time. So I don't think people are ready to pay as much fita on a day-to-day basis, with the market not realizing well. The risk of that is we get very negative numbers on early July. We can have some negative market reaction from the market given where the risks are.
Finally, Benedicte, overall, what's the best trade scenario for European equities, and what other factors will be driving sentiment this summer?
Yeah, I mean, the best case would be even zero, going back to where we were at the start of the year. This is not really what we have in mind. We have a plus 10%. So if we were to have a preliminary agreement that lies around 10% for tariff on Europe, I think that would be the base case scenario. And what that could allow is the focus to turn on other subjects. We've seen this week a very positive surprise on the German fiscal stimulus, with the amount that was much bigger than what we had expected or what the market was expecting. So that leaves the room for a cyclical recovery into Europe. When we look at European indices, the ones that are the most cyclically exposed are the DAX and the 5E, meaning there's more upside for those stocks at the end of the year if that fiscal stimulus is put into place.
That was Benedicte Lowe, equity derivative strategist at BNP Paribas. Don't forget, you can watch more videos on Reuters.com.